Welcome to the Westside Investors Network, WIN, your community of investing knowledge for growth. This is the Real Estate Professionals Investing Podcast for real estate professionals by real estate professionals. This show is focused on the next step in your career, investing. Thank you for listening. And please, if you like our content, rate us on your podcast provider. Just a quick disclaimer, the views and opinions expressed in this podcast are for educational purposes only and should not be construed as an offer to buy or sell any shares or securities, make or consider any investments, or take any other action.
Welcome back to another episode of the Deal Deep Dive segment on the Westside Investors Network podcast. I'm your host, Trent Werner. In this segment, our featured guests will share their unique stories on a specific deal they've invested in. We will dive deep into finding the deal, financing the deal, writing an offer, and the due diligence. Do us a solid and smash that subscribe button, leave us a rating, and share this episode. And now, let's dive deep. Welcome back to the Westside Investors Network podcast. I'm your host, Trent Werner. On today's episode, we are joined by Dave Wolcott, the founder and CEO of Pantheon Investments. Dave and I are going to talk about Pantheon Investments and his book, The Holistic Wealth Strategy, as well as the 6 different types of capital that each and every one of us has. Dave's going to share his approach to investing both traditionally and in alternative assets, and how you can take control of your financial future by committing to a plan and creating a vision for yourself. Now let's welcome Dave Wolcott. Welcome back to the WIN podcast. We have a special guest. Dave Wolcott is joining the show today. Dave, thank you so much for joining us.
Hey, Trent, really grateful to be here and connect with you and your audience.
So Dave and I were talking a little bit before we start recording, and as a father myself, I always love when other dads are prideful of their kids, and you happen to hit the baby lottery. How many years ago now?
Wow. So I have 4 kids, and the oldest is 26, and we then had triplets who are now 24. So
what was that time of your life like when you went from 1 to 4 very quickly?
You know, it was pretty crazy, Trent, and maybe, I could just provide a little backstory and context, because this really is what has fueled me, right? As a father, into building wealth, getting into real estate and things. This was really, the light bulb moment and the pivotal moment for me. And so to rewind a little bit, I was raised in a middle-class family in Connecticut. We didn't come from a lot of wealth. And, I was just told that the recipe for success was go to school, get good grades, you're going to get a job, and, life would just magically work out for you, right? So I kind of walked down that path like many others out there. Had the opportunity to do the ROTC program in college, and then serve my country in the Marine Corps, traveled the world, worked with some amazing people, saw combat, and learned some things they don't really teach you anywhere else, such as leadership, integrity, and teamwork. And then after I transitioned from the Marines, I got into the tech industry, and I quickly became really frustrated with the corporate world and losing that sense of purpose and that sense of mission, which is what really drove me so much in the Marines. And at the same time, my wife and I were started to raise a family. We had an 18-month-old toddler just ruling the roost, telling us what to do. We're trying to figure out where's the playbook for this, And on October 24th, 2000, that is when we literally had the baby lottery. And, my wife and I had triplets. It was a complete surprise to us. We had no idea. And the first thing that I did, Trent, was, after kind of the shock of this, was I went to see my financial planner. Right? Because all that could go through my mind, right? My paternal instinct was, I have got to provide for financial security for my family. Maybe there's retirement or something else down the way, but it's $1 million to raise a kid. And now I've just quadrupled that. So I've got to do 4 million just to get my kids maybe through college, if I'm lucky. And the traditional route was just not working, right? Investing in 401ks. And my financial planner just said, oh, don't worry. You can invest in things like 529 plans, just max out your 401k, and, you're going to be fine. You're in this for the long haul. And it was right then that I just knew that investing as a retail investor in the stock market was just not for me. And what are the ultra wealthy actually doing? So this launched me on this obsessive journey to really figure out what is the playbook of the ultra wealthy. And at this time, this is back in 2000, I started investing in real estate, active real estate. So single family, multifamily, raw land. I got into office. I got into retail. I started investing in alternatives like oil and gas, right? Working interest in oil literally back in 2000. And then fast forward 20 years, and I had a lot of success with investing as an LP and investing in the private market, and realized that I could do this way better than the 7% return, you're getting in the stock market. So I created Pantheon really to just help other LP investors really understand and demystify the private markets. What is the playbook so that you can really live that life that you've always wanted?
Yeah, and I like how you phrased that, where you talked with your financial advisor, and a lot of people are in the same boat that as you were, where they are told one thing about how to become wealthy enough to retire, and you're in it for the long haul. Just invest in your 401k, 529s, and let someone else control that for you. Let someone else guide you through that process. But I like how you took it upon yourself and took control over your financial future. You didn't rely on someone else guiding you through that process or telling you what to do. That's and I think that's a way to expedite the growth of your portfolio, of your retirement plan. And that's how people that are wealthy and are able to retire early have achieved that goal, right?
Yeah, absolutely. And let me give a simple example, Trent, that's going to really kind of make this real for people, because I know, well over 90% of Americans still have their money in two places. It's in qualified plans like IRAs and 401ks, or in trapped equity in the primary residence. But let's go through a simple equation, right, to just kind of make this real. So if you were to follow traditional financial planning advice, and let's say you worked really hard, you saved up 4 million through your 40 years of working, and you got to age 65. Well, they then give you this Monte Carlo simulation, and they tell you that you can withdraw 4%, although I believe it's even lower than that today. But let's just call it 4%. So you made 4 million, you accumulated 4 million. Now you're going to take 4% off of that. So that is 160K, right? But what they haven't really talked to you much about is taxes, fees, and inflation, which we're learning about today, right? So that 160K is probably more like 110K, that you're actually living off of. And wherever you live in the world today, that's probably not that much to kind of support a family, go into retirement and things like that. So every year you then take out 4% more to pay for your retirement. And oh, by the way, you hope you're not outliving your money, your nest egg, right? Now let's compare that scenario, right, to someone who is much more enlightened and has 4 million in, you could call it some of active real estate that you're teaching, some syndications, right, that are tax advantage and everything. And let's say, again, it's the 4 million. So if it is tax advantaged, you're now, I would say, and you can validate this, but let's say conservatively, we could take out 8% cash flow on that overall portfolio. That's fair, right?
Yep.
So 8%, now we're at 320K of the original 4 million in principal. Mm-hmm. And that should be almost tax-free, right? If you're in real estate using all the great advantages that real estate and alternatives have to offer. And oh, by the way, your actual asset value is continuing to grow by 10% a year, right? Because you're doing forced appreciation in the assets. So rather than actually killing your golden goose each year, your capital, it continues to grow, which means your cash flow is going to continue to grow. And this is how you actually create legacy wealth. You never have to worry about outliving your money, and you can live life on your own terms.
Yeah, and just another example to kind of compare the two different investment vehicles, and I'm happy to share this, but I remember the first 5 years, I want to say, of my wife working. She's a nurse, works full time, has her retirement plans through work. And I think her 401k had like 15 grand in it after 5 years or something. And in the same period of time, with us investing in real estate and all those, and me being in real estate, we grew our balance sheet on the real estate side by almost $1 million. And so those are the two different, same time period, different investment vehicles, different investment strategies, and one significantly outperformed the other. And it was cash flowing and all that stuff as well. So that's a real life, real numbers example for the listeners to kind of validate what Dave is talking about here.
Yeah, 100%. And if you start to really study what some of the best investors in the world, like family offices, are really doing, you can see their asset allocation mix. And typically, like groups like Tiger 21, like I've had Michael Sonnenfeld, the CEO, on that group. There's 1,300 members. Average net worth is 100 million. They have, roughly speaking, about 25% in real estate, 25 to 30% in private equity, and literally only about 22% in public equities, right? So what does that tell you, right? So it doesn't need to be all or nothing, but I think, we really need to wake up and realize that there's other solutions outside of what Wall Street is positioning for us in this, paradigm of 60-40 type split and things like that. So I think people have a really big opportunity to, optimize their yield as well as reduce their risk by diversifying their overall portfolio.
Exactly. And is that what Pantheon Investments, as the founder and CEO of Pantheon, is that kind of what you are really preaching, as well as your book? And I want to talk about your book as well. But let's start with Pantheon Investments. Is that kind of what Pantheon Investments is, I guess, motto is, or their core value?
I see it this way, Trent. I mean, my personal vision is really to help people change the way they think and view wealth. And what does wealth actually mean, right? So after studying billionaires, centimillionaires, right? And being in this space for almost 25 years myself, I believe that true wealth actually consists of 6 forms of capital, not just financial capital, but it also involves other areas like human capital, your health. You could have all the wealth in the world, but if you didn't have your health, right, you'd only want one wish.
Yeah.
There's also intellectual capital, right? This is why everyone is tuning into your podcast right now, because can we get an edge? Can we learn? Can we grow, right? You've got to be increasing your intellectual capital. There's emotional capital, there's spiritual capital, right? And all of these other forms of capital that to me truly define what wealth really is, right? I want to be a time billionaire, right? Where I get to choose how I spend my time and feel like I have completely enough time in my day to be working on those things that really, make an impact and are, aligned to my unique ability and what it is that I want to do in life. So trying to create just different thinking, that's really our ultimate goal. Now, how do we do that at Pantheon? I just see this as all solving problems for investors out there, which is we run a virtual family office. So if you want a done for you, top-notch team that can help you with alternatives and really maximizing your wealth, we're managing families, from 3 million to 100 million in net worth. And, we can support with asset protection, estate planning, investment, strategy, and all of these different areas, right? So that's kind of one key area. We provide deal flow into real estate and also alternatives like oil and gas and private credit, some other really cool things. Oil and gas, for instance, another great way to offset active income, by investing in that. And we have a software product as well that helps you manage and measure your entire portfolio, not just stocks, bonds, mutual funds, do cash flow modeling and simulation to really, optimize, because what you ultimately measure, gets managed.
Absolutely. And I like what you talked about with the 6 different forms of capital. And that, I mean, you wrote a book called The Holistic Wealth Strategy. Those 6 different forms of capital, sound pretty holistic. Is that kind of what your book and clearly your book and Pantheon are aligned in the sense that you are focused on more than just dollars and cents. You have a bigger picture outlook on things, right?
Yeah, 100%, Trent. And, it all really starts with creating a vision. When is the last time you sat down with your spouse, with your family, and you really created a crystal clear vision for yourself of what does it look like in 10 years, in 20 years? What does it look like? What does it smell like? How does it feel to you? Right? Even if I added, 3 extra zeros to your bank account, how is that going to materially impact your life? Right? Because you get to a point where adding more zeros actually doesn't change things. It's all about how is it going to maybe change how you utilize your time? Where are you going to be investing? Maybe you're investing more in your relationships, like your family, or you're investing in your health, right? With alternative things like stem cells and, things like that, right? So the foundation of the holistic wealth strategy is to actually first start with getting crystal clear clarity on what your vision is. Because once you have a destination, then you will know how to get there. If you don't have a target, you're going to miss every time. Once you then have a vision statement, we kind of have 5 different phases that you can kind of walk through along this approach.
And when it comes to this is something that my wife and I do as well. We kind of have quarterly meetings as our business partners, right? And in your opinion, what does it take to create that vision statement for your family? I mean, there's a process to creating that, and I'm curious what your thoughts are on that.
Yeah, absolutely. So, if you've ever read the book that I totally recommend, someone I know, Cameron Harold, wrote Vivid Vision. Phenomenal book on creating a vision, and it's more for the corporate side, but it also ties to personal vision as well. And the first thing is changing your environment, right? If you want to talk about the process, so it's not about sitting in your office by yourself on your laptop. It's more like maybe you're in the favorite place in the world with your spouse. Maybe whether that's a beach, you've got a Mai Tai or, some beverage of your choice, right? Kind of hanging out. Maybe you've exercised, you've meditated, right? You've gotten great sleep. You're in an inspirational environment. And then you just start to really kind of create and unfold this story of what you want your own life to look like, right? What is the quality of your relationships with your kids, with your parents, with your siblings, with your friends, right? What do you want them? What do you want that to look like, right? So then you can start to define, well, I want to, right now, for instance, my parents are really aging and getting older and, going through some challenging times. I know that I don't want to have to look back and say I wasn't there for them, right? I wasn't involved in that. I want to be connected to them. I want to be a source of support, right? So starting to define things like that. Talking about your financial capital, right? What do you want your income statement to look like? How much do you want from passive income? Do you want to be single threaded in terms of one source of income? Or do you want a dozen sources of income that are coming in? How much risk do you want in terms of your overall portfolio, right? And, things like that. So really assessing your own investor DNA, right? And how that might align to you. And then, thinking about your health, again, that one is so huge to me because, look at someone like Steve Jobs, right? He had all the money in the world, but yet he couldn't actually buy himself another day. Even think about Warren Buffett right now. That's like, Trent, would you actually trade your, would you trade positions right now with Warren Buffett? No, exactly, because he's in his 90s, right? But he would give like probably the majority of his wealth to trade his position with you,
Absolutely.
right? Because because you got your wealth, right? You got your health. So I think health is super important. And then as you really create that vision, what you can do is your future self, you can bring that into the present and then start to become your future self by your habits, your goals, your routines. Like I could look at your calendar and really, easily tell, what, if you're going to achieve that future self or not, right?
And now here's a word from our sponsor.
Get things done while you're on the move. Learn more about working with a virtual assistant through Offsite Professionals. It's a great way to get all the things done that you need to get done. Have freedom in your time and streamline your life by automating your business. Stop spending time on the tasks that you can delegate and start spending more time on your superpower. Call us today at 503-446-3177 or visit our website at offsiteprofessionals.com.
Uptown Syndication is now offering a syndication coaching program for you to take your real estate portfolio to the next level. This is your opportunity to have experienced syndicators, AJ and Chris Shepard, coach you on your way to controlling your real estate investing future. Our coaching program will provide you with the tools and framework needed to begin syndicating real estate in your target market. Go to uptownsyndication.com today to learn more. Mm-hmm. Well, and when I asked you that question, I was curious where you were going to start. You didn't start with what does my income look like? You didn't start with what does my net worth look like? You started with the other capital. And a lot of people, especially people younger, getting started, trying to create a plan for themselves, I think focus on the money aspect or the wealth aspect first. And there's more to life than just money. Money is a very good tool and a key component. But if you're not thinking about it holistically, like you've touched on multiple times, your vision is going to be hyper focused on maybe the wrong thing, an important thing, but maybe the wrong thing, or just a piece to the puzzle, not the entire puzzle. And having gone through a pretty, traumatic experience in, I guess, almost 8 years ago now, where I'm not supposed to be here. I died 8 years ago, and it really opened my eyes to seeing that bigger picture at a young age. And the way that you phrased it, it just allows people to understand that money is important, but it's not everything. And so I appreciate you touching on that, and especially bringing up Warren Buffett. He's got all the money in the world, but he would pay me a lot of money to trade places with me right now.
Yeah, absolutely. I think a great way to really think about money, don't think about money as like the end point, right? Like I want, I want 1 million, I want 10 million, I want 100 million, right? The way you should think about money really is more of, it's a barometer of your success, right? So if you're having success by having great health, which gives you 10x energy, being really focused on your unique ability, your superpowers, if you will, and how you can contribute to the marketplace, right? We live in this capitalistic society, so how can you bring that there? Then the market is going to reward you on what that looks like. So whether that's adding 1 million and on your balance sheet, right, through real estate, or creating passive income, a 6-figure passive income stream, or becoming a billionaire, right? It's going to be really that byproduct actually of your success. But if you just focus on the money, you won't make it. Should not be the primary focus.
Absolutely. Now, Dave, I want to switch gears to the holistic wealth strategy. I like what the blurb on your book is. I even wrote it down. The playbook to becoming ultra wealthy and having not only freedom of money, but freedom of purpose, time, and relationships. Again, we've touched on the different capital that people have in their lives. Your book seems to encompass that. What are a couple things or a few things about this book, The Holistic Wealth Strategy, that you think people will really resonate with when they read it?
Yeah, I can just give kind of a high level breakdown. We've really talked about a couple components, right? So the first one is that vision statement, right? Getting clear on what your vision is so you know where you're actually going, right? And then the first step, this is really interesting that everyone misses. You might be thinking about, oh, is it fix and flip? Is it, a syndication, right? What is it? No, the first step in this framework is actually you yourself and understanding that you are your greatest asset, right? So you have to make that mindset shift to know that, how can I be investing in myself, right? Do I have a growth mindset or a fixed mindset? Because I guarantee you, Trent, you have multiple stories, as do I bet many of the listeners out there, that the first time you talked about your first real estate deal at the Thanksgiving or the family dinner table, people said what to you? It's risky. My financial planner says that's a really risky idea, right? Well, the reason he says it's a bad idea is because he can't make any money on it, right? So everyone is going to kind of tell you no, but you have to start having kind of this growth mindset and saying, like, wait a second, you're telling me to defer taxes in my 401k, and that's what everyone does. But wait a second, aren't taxes likely going to go up in the future, right? And wouldn't you rather actually pay the seed rather than the harvest? Right, So I would venture to say that, right, being curious, asking questions, having this growth mindset is really key. That is the foundational step to investing in yourself. And phase two, we then move into, which is all the 6 forms of capital that we talked about. How can we increase, right, our intellectual capital, our emotional capital, our spiritual capital, these other things that are really such key drivers to me of, overall net worth, really what that looks like. And phase 3, we move into actually creating a team and infrastructure around your wealth. So how many of you out there actually have a dream team around your wealth? Do you have, even if you have a million, 2 million, or 10 million, or 50 million, do you have a rock solid asset protection plan in place that's bulletproof? You have kids right now. Do you have, and you had a perilous event? I mean, life-changing event, sorry to hear, but do you have an estate plan that's fully, baked and ready to go with a great top-notch attorney that understands real estate and alternatives for business owners? That's in place. And also, we love to use the infinite banking strategy, cash value whole life insurance. I'm sure you've had some guests talk about that. But we help people set that up as well, so you can actually create, control of banking inside yourself. You can invest in other assets and use the same dollar twice. You've got estate planning and pieces there. So that is really core in terms of that infrastructure and building a team. And I'll pause there before we go into the last phases.
I just want to applaud you for talking about the growth mindset and I guess emphasizing how important that is for someone's success. Because if you're limiting yourself between the ears, it's going to be very difficult to achieve the goals that you want to achieve. So I just wanted to applaud you for saying that. I'm a huge proponent and believer of the growth mindset and setting your goals high and working to get to those goals. And if you're selling yourself short and limiting yourself between the ears, it's going to be very, very difficult to achieve things that you set out to achieve.
Yeah, the most important real estate is that right between your ears, right? Yeah. And whether you're an active investor or a passive investor, 80% of this game, it's all psychology. It's all how you think. It really is. I mean, you read, like, if you read The Road Less Stupid by Keith Cunningham, who was Kiyosaki's, one of his original mentors, and probably one of the rich dad guys. I mean, he lost over 9 figures in real estate, lost that, and then came back and made it up and even more, right? So can you possibly imagine that type of scenario? I know Rod Khleif also, right? He lost like 50 million, right? And totally came back from that. So it just, and think about even people like Elon Musk, right? What is the difference between him and someone you went to high school with who's in the same town, the same set of friends, right, with the same lifestyle versus Elon Musk, who's like, who knows what, what planet he's going to next, next week, what he's going to create. I mean, it's just, it's really amazing.
And a lot of those similarities are between the ears. And I think the people that are successful that we see, well-known people that are successful have one thing in common, and it's they believe that they could do it, and they did it. So that's a very, very, very important piece to your wealth journey, is believing that you can get there.
Yeah. So I'll cover phase 4 and 5. This is where it gets really fun, Trent. So phase 4, what I found through my journey and after talking to thousands of investors is that people might say, hey, this is all great. I'm working on my mindset, or I want to invest in real estate or some, alternative asset, but I don't have any money. I don't have 50,000 to invest. I don't have capital sitting around. Well, as I pointed out, the majority of people have most of their assets in IRAs or 401k, some form of qualified, government-sponsored qualified plans. So phase 4 is all about asset repositioning. How can we look at your entire portfolio and reposition it to a higher yield and lower risk? So we have, for instance, right now, one of the opportunities we have is actually a private credit fund, which is doing lending through private credit to small businesses that are growing. And this kicks out, can kick out over, 20% returns to investors. So let's say, even if you take out a home equity line of credit on your house or even one of your rental properties, and you're borrowing even at today's rates of, whatever you want to call it, 7-9%, but you can now move that up to over 20%, increase your mortgage interest deduction, and also increase the yield, right? And even above servicing the debt, right? This is how we can really optimize things. And then also, by the way, moving into a non-correlated asset that's not tied to the stock market, right? And the same would hold true to, say, a 401k, right? I'm sure your listeners are keen, have heard about self-directed IRAs. That's another option. We actually even have a 401k exit calculator. And I'll put a disclaimer, I'm not a financial advisor or a CPA, but what I simply did was create a calculator and create some math around this scenario that said, well, even if I paid a 10% penalty on my 401k and paid the taxes now, when would I break even? And if my assumptions are right, where would I be actually over time? And it's amazing because if you run out that scenario, if you take 100K, you paid, let's say you have a net investable 55K after taxes and fees, and you put that in solid syndications that were giving you tax-free compounding, you'd be over 2 million in 20 years. And if I compare that to just leaving it into the stocks, which were making 7.5% really, which they've done historically, right, over a 20-year period, that's about 386,000, right? So which scenario would you rather take, right? And not to put all your eggs in one basket, but it definitely gives you an opportunity to rethink, how is my portfolio situated today? Can I optimize the yields? Can I lower my risk? And can I reduce my taxes? Those are the 3, big levers we look at in asset repositioning. And then lastly, Trent, the fun one is phase 5, where we talk about building massive passive income. So how can we diversify into non-correlated assets from the stock market that give us really a trifecta of a return, such as cash flow, tax efficiency, and forced appreciation, right? And we all understand this model that's why we invest in real estate. But did you know there's some other asset classes that do that? For instance, oil and gas. We've placed probably over 25 million into oil and gas in a couple of years alone, because you can actually take up to 100% of your investment and offset active income. So if you're a W-2 high income earner, your spouse, you've got active income in your family, you can completely offset that. And you're now investing, again, you're not all invested in real estate or in stocks. You have a different commodity that you're invested in that's also providing passive income and has some upside potential, right? So looking at different opportunities. And as much as we love real estate, I totally love real estate as well. But we've all learned, if you haven't been through a cycle recently, we're seeing some of the challenges in multifamily these days. And we're seeing that interest rate risk is a high risk when you're playing the game of real estate. So that debt can be a double-edged sword. So why not kind of, again, diversify into some other asset classes? Our thesis is really around energy, private credit, debt, and also real estate. Those are the key ones that we like.
So Dave, hypothetical scenario here, we're going to use that 55,000 net investable after taxes and fees. Let's say someone is just starting their journey and is following the plan. Is there an asset class that you would, I guess, recommend or think about investing if you were in that situation as your first investment after liquidating your 401k?
Well, if you're not accredited yet, the biggest thing you have to figure out is how to get accredited. So if anyone's ever played the cash flow game, right, that's all about moving into the outer circle of the game, which is accredited deals. That's where you see the best opportunities and you can get access to those. If you're non-accredited, I really think the fastest way to really grow your capital, of course, outside of starting a business or, if you and your wife have a great, high income jobs that you can meet from an income standpoint, real estate lends itself really well with things like, fix and flip and BRRRR. I mean, my oldest daughter, who's 26, she literally, this is what's so great about this, Trent, right? Like, I love really empowering people by thinking differently. So we obviously talk about this in our household all the time, right? We strategize and mastermind about all these things. So just follow this story for a minute, right? So she was going to college. She went to Virginia Tech, worked during the summers. We had her actually set up an infinite banking life insurance policy during college, which she contributed her money to during the summers, funded the policy for a couple of years. When she graduated, right, at 22 years old, her and her boyfriend, who's now her husband, bought a house in Knoxville, Tennessee. They did basically a fix and flip on this thing and renovated the property for like 18 months. And they then sold the property and made like over 130,000 that they put on their balance sheet, right? In like 18 months just after college. Now, if you compare that to what kids are normally doing, even if they get out of college and they're making, 100 grand at a job, to actually put that on your balance sheet would take a lot of years of saving 20% after taxes, just to be able to get there. So she was able to put that on her balance sheet. They then paid back off the infinite banking policy that they had borrowed. So then they flushed that up. And then they went and bought their next one in Nashville, Tennessee. And now they're on their third one in Charlotte. And this is literally in just, the past couple of years. The other property is being rented out now. So she's got a cash flow coming in. She's positioned tax efficiently. So that's my recommendation to people who are starting out, is learn everything you possibly can investing in yourself, and then look at maybe some of those other opportunities like, real estate has, to get to that accredited level as soon as possible.
I want to say thank you for sharing that story, because I think a lot of kids or young adults just getting out of college are seeing the world that we're in. And you see it all over social media, the jokes about, my grandpa bought his house for a bag of corn back in the day. How am I ever going to buy a house? It's doable. It's possible. And you can use real estate to grow your balance sheet a lot faster than just penny pinching your way to it. So I appreciate you sharing that. And you said your daughter's what, 26 now? So
yeah,
she's got life ahead of her and was able to get started right away, which is awesome. Awesome to hear.
Yep.
Well, Dave, Is there anything else you want to share with the listeners today?
I think in closing thoughts, Trent, I'd really just like to, emphasize a couple of points. One, get clear on your vision statement. The first thing you do when you go into Google Maps is you know where you are, but the only reason it works is because you have a destination and you're able to get there. So get really clear on what that vision is, and then start investing in yourself and make that paradigm shift and understand that you are your greatest asset. Start working on your mindset. That's where it all starts. The numbers will come over time. It doesn't happen overnight. Building wealth is a process. But the more that you can learn and understand about yourself, self-awareness, really the psychology of all of this, the faster you're going to grow.
Absolutely. And Dave, where can people hear more from you or connect with you?
Yeah, what I wanted to do, Trent, is make a special offer to your audience. And if they could download a free copy of our book at holisticwealthstrategy.com.
Very nice. And we'll make sure we link that in the show notes. So definitely go grab a copy of the Holistic Wealth Strategy. I myself will be reading it for sure after our conversation. So Dave, thank you so much for joining us today.
Thanks, Trent. Really appreciate the opportunity.
Thank you for listening to this episode of the Real Estate Professionals Investing Podcast on WIN, your community of investing knowledge for growth. We hope that this episode has increased your knowledge and added value to your path to freedom. If you would, please take a second to rate us so that we can get more great investors to interview. If you or someone that you know wants to be on, please visit westsideinvestors.com and fill out our form to be on the show. Thank you again and enjoy your day.